Hey everybody, and welcome back to the Teaching Tax Flow podcast. Today, episode 158. We are going to demystify material participation. What that means and what that doesn't. But also, before we get into it, let's take a brief moment and thank our episode sponsor.
This podcast is brought to you by Strategic Associates. Are you a high-income earner, real estate investor, or successful entrepreneur who is frustrated by having to pay $75,000 or more of annual tax liability? If so, Strategic Associates can help. Your first step to saving thousands, if not hundreds of thousands, is to contact Roger Roundy at roger@strategicag.net or by calling 801-641-2956 and be sure to tell him TTF sent you.
All right, everybody, we are back here again on the Teaching Tax Flow podcast. As you've seen in the title, read in the show notes, hopefully you can see or read one of the two, hopefully both. But we are going to answer that question, right, of what is, or I should say, we are going to demystify what exactly material participation is and is not, as always. But we got to welcome him back, I guess. Chris Pacuro, welcome back to your own show, sir. What's happening, bud?
It is an honor to be back. I'm so excited about our guest today. We're going to demystify a concept that's extremely challenging for taxpayers, especially business owner and real estate investors to understand and to grasp. Our guest today is a huge overachiever in a positive way. We talk about tax professionals and we hold both enrolled agents and CPAs in such high regard. But he has both those designations, so that's pretty sweet. And we're excited to have him. He also hosts his own podcast we're going to talk about. But I'm excited to welcome Jeremy Wells to the Teaching Tax Flow podcast. Thank you so much for joining us.
Thank you. It's really an honor and privilege to be here. I've loved the show, love what you're doing to help spread the word about good ways of approaching taxes and tax strategy for taxpayers out there. There's a whole bunch of junk information out there, and we can't really shut it down. All we can do is fight against it with good information. So thank you for putting this out there.
Our pleasure, and I had the pleasure of meeting Jeremy in Florida, actually, at a Taxposium conference about a year and a few months ago, and that was great. I know he's a resident of Northeast Florida, so it was a quick little jump over to Orlando, and it was in July, so we were pretty much staying inside at that point.
Yep, absolutely. You got to stay in the air conditioner here in Florida in the summer, especially in Orlando. The humidity is just not worth going outside during the middle of the day there.
Well, Jeremy, before we jump into material participation, can you give us a little bit of more information about your journey? And what I really love about your podcast and the work you do is that you came from academia, right? So now you're taking that into practice. So I feel like your advice is very academically sound or research sound, even though you might, but also practical.
Well, thank you. That's what I aim for. So that's right. I straight out of undergrad, I had my sights set on law school, actually, but that changed. A few friends of mine from undergrad who were a year or two ahead of me, they came back to campus to visit, told me how great grad school is. I had always wanted to teach. Actually, teaching is in my roots, and so looked at grad school, decided teaching would be the right path for me, and so went to grad school. I spent 6 years at LSU. If I'd gone somewhere a little less fun than Baton Rouge, I might have gotten done a little quicker. Probably should have gotten done in 4 or 5 years, but that's okay. Baton Rouge was a good place to spend 6 years. But got a PhD in political science, taught at Texas State University for 5 years, taught international relations, actually. So how am I an accountant now? We'll go back to originally the plan was law school. And so I had taken a couple of business law classes, and along with that, a couple of accounting classes, because I thought I was going to minor in business. I wanted to focus on contract law, the business side of law. So when I was thinking about the future with my wife, especially around the time our daughter was born, 2017, looking at career prospects in academia, and it just wasn't there. Really, the academic job market has always been tough, but really, especially since the Great Recession, that's been a really tough job market. And I was looking for something that not only would have better job prospects, but something where I might have a little bit more independence. Not have to clock in and out 5 days a week and commute to work. So thinking back to some of the things I had studied in college that weren't what I was doing, and thinking about those accounting courses, I actually did pretty well in them, found it interesting. The university I was teaching at had a decent accounting program, so I talked to some of the faculty there. I also started reaching out to CPAs online and in person, met a bunch of great ones, decided this is probably the way I want to go. And one of them recommended looking at the enrolled agent license, sort of a little bit quicker way, not an easier way, but a quicker way to get into the profession. So I started doing that. And in the meantime, started working on the CPA, got that a couple years later, and have been doing this for 7 or 8 years now, and not looking back. Love it.
Well, the positive of being a LSU Tiger is you've typically are going to have good football,
Yep.
really good baseball,
Yep.
hit or miss on basketball, but that's all right.
That's okay. That's okay. Yeah, absolutely.
You got the two big ones. I mean, they love their. Baseball is my favorite sports, and they love their baseball down there, and I appreciate that a
And
lot.
as a grad student, because I was a student, I had the same access to all of that as every other student. But because as a grad student, I had seniority over all of the undergrads, so we basically got our pick of season tickets to the football games. And then it was free admission to all the other sports. So I went to the box to watch a lot of LSU baseball games for sure.
Wow.
Yeah,
Well, we know you live in Gator country now, so we'll but
that's right. That's right. Yeah, when settling down, wife and kid, the sports thing it became a lot less of an important
yeah.
factor in life. But yeah, I still catch up with what's going on there a little bit every now and then.
Awesome. Well, let's jump into material participation. This is something that I find challenging to explain to a few different segments of taxpayers. Uh, Number one is going to be your real estate investors that ultimately that run into what are called passive activity loss rules. The other one are people that invest in partnerships in a limited capacity, and ultimately people that have losses that are on their tax documents, but they don't get to deduct them in their current year. That's about as simple as I could say it. Those are the people that, in fact, can you kind of talk about a little bit about what material participation is?
Yeah, it's always a fun conversation, and by fun I mean not fun. When you prep a return for a real estate investor, and now you have to explain why they're still paying taxes, even though they thought they had all these losses that they could take for the year. So, yeah, the gist here, right, is that eh, you should not be able, right? And this is debatable, right? I'm not taking a position here. I'm just saying this is what the law says, right? The gist here is that you should not be able to offset active income, so your wages basically, along with some other stuff, your wages with income that is from activities that you didn't really put as much work and effort into. Now, what we mean by work and effort is going to be important, because even though it feels like you put a lot of work and effort into something that is by definition a passive activity, that may not actually qualify when we're talking about what material participation is, right? So that's why, that's important. We first have to make that distinction between passive and non-passive income, in terms of thinking about whether you're going to be able to take those losses or not. And of course the goal here, if you're the taxpayer, is to try to have that active income being offset with those passive losses. You work and you earn money, you want to have some paper losses that you can offset that with, reduce your tax liability. Totally understandable. All right, so how do we know if you can do that? And the what we have is honestly one of the most complicated code sections, right, in all of the tax code, and one of the most complicated sets of regulations that goes along with that. But it all comes back to Section 469 of the tax code, and these are the passive activity loss rules, and that's all it is. And so that's what tells us in print whether or not you're able to actually take those passive losses and offset your active income with that. And we as the tax professional, we're reading through that, we're breaking that down, we're trying to figure out if there's any way we can squeeze some of these rules and apply them to your actual passive income. And the trick here, the key, right, is to materially participate. Basically, you take that passive income and you do the right kind of work, and you do enough of that work throughout the year to make it to where, even though it's still passive, it's now actually non-passive, and we can offset your active income. So basically, a lot of the questions we're asking real estate investors, but then also business owners and investors when it comes to the pass-through income they're getting. So if you're a partner in a partnership or a shareholder in an S corporation, even if you're even if it's not real estate focused, right? That business, because you're an investor who's not maybe directly involved in the day-to-day operations, you don't actually work for the company, you're not one of the leaders of the company, you're just an investor and you just put some money into it. That's by definition going to be passive as well. So it's beyond just real estate, right? We've got a lot of taxpayers out there who find themselves with this passive income, and honestly, they get a little confused by that, right? They feel like they've done enough to earn being able to take advantage of those passive losses, and sometimes we have to have a hard conversation with them about that.
Absolutely, and that's where people have to understand one of the 3 laws of teaching tax flow. Tax laws are written. I mean, tax agencies are involuntary business partner. Tax laws are written to encourage and discourage certain behavior, meaning just buying a short-term rental property, just investing in oil and gas, for instance, just buying a rental investing in an apartment complex, even if you're rep status, doesn't guarantee you that you're going to be able to deduct those losses on the current year tax return. You have to have material participation under Section 469. But the IRS is friendly enough to give us some tests.
Yep.
Um,
Yep.
can you
And there's
speak about
7
a
actually,
little?
right? Like they
Sure.
so this comes out of like I said, the regulations, and this is it's complicated, right? There's a lot to this. We're up to, I want to say there's about a dozen different regulations just under this one code section, right? And in particular, one of them, 5T, the T stands for temporary, and believe it or not, they've been temporary for a couple decades now, right? Like, they're about as close to permanent as you can get and still be temporary. But anyway, that is where we have the 7 tests. And for the most part, most taxpayers are really only going to look at 2 or 3 of these. A couple of them are there. They're just not applicable to most of the taxpayers that we're going to work with. Depending on what you're doing in that activity, and in this case, I like to use the word activity because it could be, like I said, you've invested in a partnership. It could be that you own a rental. It could be that you're a passive shareholder, or you're a silent shareholder in an S corporation, right? All of these are passive activities for the purposes of 469. So, is your participation in this activity going to rise to being material and therefore unlock those losses and make them non-passive for you? And so, yeah, it's just a question of looking at those 7 tests. And like I said, really, we start with the first 2 or 3. Those tend to be one, the easiest to track and the easiest to document and make a good solid case for. We always come back to substantiation, especially in these kinds of things. Remember, we're taking a position that by definition is not generally the rule, right? The general rule is passive losses can offset active income. Now, there's always the exception to the rule. The exception to the rule is if you materially participate in that passive activity, you might be able to offset that active income. So if there's ever a question, right, the default position is, no, you can't do that unless you've done these things, you've met one of these material participation tests. So we always want to try to document that as much as possible, just in case there's ever a question about that.
It's yeah, if you're listening to this, watching it, think about this. Think about these losses being like a handicap parking spot. By default, you can't just pull your car into the handicap spot. It's there for people that actually need it, like my dad. That's why I kinda like traveling with my dad. Save some stuff. But it's there for people that need it legitimately. So if you're illegitimately parking in it, um, the penalties are significant. Your car is gonna get towed. There's not a 100% chance you're gonna get caught, so we never advocate doing anything unethical. But if you meet one of the tests, i.e., you either have a temporary handicap permit or a permanent handicap permit, slide your car in there and go about your business. And that's kind of the way I think about that situation.
Absolutely, absolutely. I think that's a great analogy. It's something that every now and then, and we hate to do that. We're not looking to enforce. As your tax professional, as your tax advisor, your tax return
Yeah,
preparer, we're not looking to enforce the rules. We're looking to help you make sure that you're following the rules as much as possible. And so when we ask you for information, or when we downright insist on information, we're doing that. Yes, there is part of that to protect ourselves, because we can't prepare a return in a way that could be considered incorrect, and then therefore that's going to cause problems for us as the preparer. If we have signed our name on that return as the preparer of that return,
mhm,
there's a potential for us to have some problems with the IRS with that return if we put something on there that isn't true. But you, as our client, we're looking out for your best interest. We don't want you to wind up in a fight with the IRS and you don't have the information, and especially the documentation to support the position that we took on that return for you.
correct. I saw a return. Um, and this person is real estate professional status, rep status, but they invested in a limited part, or they invested as a limited partner in an apartment syndication. They don't have material participation and they own 3%. And the previous preparer let them take that entire loss. And it's like,
That's
that's
a
just
problem.
one of those things.
That's a
Yeah, it's a
problem.
problem.
Yeah.
So you just inform them and say you should amend this return. But so my point is, and this is where I think, and I'd like to know about your experiences. I feel like, and we're pretty heavy in real estate on our private practice. Real estate professional status doesn't just give you a green light to write off any type of real estate investments. You still need to meet one of these um material participation tests and have some type of ownership too. Like in the hours, um, this isn't necessarily an hours discussion, but sometimes someone will say, "Well, I work as at a real estate brokerage. I'm the office manager, so I have 750 hours in real estate." You might, but you don't own any of that brokerage. So
Yeah.
there are rules
Yeah.
with that.
Yeah. And that's always a fun thing because I live in Northeast Florida, and the first few years when we moved here, I was reaching out, finding a lot of clients locally, and Northeast Florida real estate market has been relatively hot, and growing for a
Mhm.
while now. At one point during the pandemic, I saw a statistic somewhere that there were at one point more licensed real estate agents than there were homes for sale on the market.
Right.
I think that's shifted, over the last year or two, but it's a lot here, and I've
Mhm.
gotten a lot of clients and a lot of questions about what exactly is that concept of real estate professional. I've got a real estate license. Does that mean I'm a real estate professional? I own X number of properties. Am I a real estate
Mhm.
professional? Like your example, I work in a brokerage. Does that make me? And it's one of those things where the way we just in common language would use a term may not be the way tax law specifically defines that term. And this is one of those cases, right? Just because you have a real estate license doesn't make you a real estate professional for tax purposes necessarily. There's more that you've got to be able to show there. And so it's really important to understand what those rules are. And, ideally, for me, work with a tax advisor who knows those rules and can advise you on them.
Right, and we did I think we're gonna redo a little content because we, you know, being a realtor doesn't make you a rep status,
Yeah, exactly.
but you could be rep status without being a realtor. But it
Absolutely.
so
Yeah.
they're different concepts. Now your activity as a realtor, depending on what activities you're participating in, especially if you're a broker or maybe you those hours could count. It's just a matter of, um, it's just it's tough and,
And I've had situations where I've had clients that they went and got a real estate license. They spent a lot of time and even a lot of time that would qualify as material participation into their real estate activities. They started putting together a portfolio. The whole time they kept their W-2 job though.
ugh,
And that's always a problem, right? For people looking to be considered for tax purposes a real estate professional, because it makes it really, really difficult, if not virtually impossible, to make the claim that you spent at least half of your working time in
uh-huh.
a real estate profession, right? And so you've got a W-2 with six figures coming out of, the investment firm that you work for or for the, tech startup that you work for or whatever it
Mhm.
is, that can be a deal breaker. And it usually is. So it's really important to understand all the rules and not just assume based on what the label is that you've met those qualifications.
Well, when we developed, which I've been telling John, kind of tongue in cheek, when we developed the teaching tax flow dating app, there's going to be swiping going on. Hey, I'm a rep status. Okay, I want to find the sugar daddy or sugar mama W-2, or oh, you have passive
Absolutely.
activity losses. I'm about to exit my business. Let's get together. Um,
I can see it now. Like there's the toolbar, right? You're squeezing it out one end or the other on how much you need, right? That's the real match, and then the photo comes afterwards, right? So,
Absolutely.
but
Um, as far could you give us a couple tips as we kind of wrap up on the practical side of maybe tracking hours, how it works when you have two spouses? Maybe can those hours be combined at all? And just some practical tips. And we've got shameless plug, but one of the podcast sponsors is Reps Tracker, which is an app I've used that helps you track all this, but you still not, you don't have to use an app. You could have a spreadsheet if it's documented properly. So what are some of the hacks that you can give us?
Yeah, 100%. And that's always what I recommend, whether you're talking about tracking your material participation in your rental portfolio, whether you're talking about tracking your income and expenses for your business, whether you're talking about tracking your mileage, right? There's an app for that, right? That's that saying that's been around for, when they introduced the iPhone, 18 years ago now. We've been saying there's an app for that. And there is. And we're always going to push for that because it simplifies things. But in the meantime, just start off with spreadsheet, right? And when you get sick and tired of doing it in that spreadsheet because you feel like you're constantly in that spreadsheet logging this stuff, that's when it's time to look at the app, right? Until then, use the spreadsheet, because not only does that save you the cost of having to subscribe to another app, right? But it also forces you to sit there and think about, okay, what am I actually documenting here? What is actually important? What do I actually need to be tracking? And as you manually enter, each one of those rows into that spreadsheet, you see that build up over time. And I think there's a psychological effect there. But yeah, absolutely. So you need to keep that contemporaneous log. And for those of you who have been small business owners and you've worked in a business where you had to drive around, you should have heard that phrase from tracking your mileage, which you need to be doing with your real estate portfolio also. If you're driving to go check on your properties, if you're driving to go make repairs or mow the lawn or whatever you're doing for those properties, track the mileage and then also track the time. And I would make this two separate tabs inside that same spreadsheet file, right? So that you keep it all in one place. But yeah, absolutely. You need to track the date, the amount of time, and what you actually did during that time. And if you did multiple things, if you repaired a doorknob, spent a half hour doing that, and then you mowed the lawn for an hour, and then you did some other stuff, track each one of those individually,
Yeah.
because in your mind, this is all just working for your real estate portfolio. But there are rules. There are certain activities that qualify, and then other activities that don't qualify. And if you're not 100% clear on what qualifies and what doesn't, one, ask your tax advisor. But then in the meantime, just itemize all of that out and make it a lot easier on yourself during tax time. But yeah, definitely recommend tracking all that. And you need to be doing it contemporaneous. Don't wait until tax time. Don't wait until, 6 months or a year later and then try to just remember, all those little 15, 30, 60-minute tasks that you completed at your rentals. Do that at least on a daily basis if you're doing that kind of work at your rentals.
Well, I appreciate it. I would say, as we wrap it up, material participation is required to to take in any type of activity, as you've said, from passive to non-passive.
Absolutely.
Track things. If you tell your tax professional you had miraculously exactly 15,000 miles on your vehicle, they might not eye roll you out, but inside they are, and that's okay. We just do it. You put out so much great content, not just for tax professionals, for entrepreneurs. Can you as we wrap up, let everyone know how they can find you? And obviously, we're going to put it in the show notes.
Well, thank you very much. I appreciate that. So I write a lot of my content is geared toward other tax professionals, but I do try to make it at least somewhat accessible to non-tax pros if you're kind of on the nerdy side, or if you just want to listen to where maybe your tax pro is getting their ideas or information from. But right now, it's mostly two different things. One is a Substack that I occasionally send out. I need to send out more, but that's jwells.tax. And then I have the podcast, which we have a new episode. They're usually around 50 to 55 minutes. That's the minimum for 1 hour of CE for tax professionals, continuing education. That comes out every other Wednesday. Each episode is one specific tax topic that I do a little bit of a 50-minute deep dive on, go through the law, but also look at some case studies, try to make that make sense to whoever's listening to it.
Awesome. Yeah, man. We'll drop in the show notes, as Chris mentioned as well, too. And Jeremy, my big takeaway from this, right? And I'll leave it kind of at that one is we started this off talking about education, right? And as a tax pro, I'm going to make the assumption that you actually never stop educating your clients. Is that a correct assumption?
One of the favorite parts of working in academia was not lecturing, not researching and writing, although I enjoyed all that work. It was the office hours. It was the one-on-one conversations with students when they would come. And a lot of times those conversations wouldn't be anything about the actual coursework we were doing. It would be about what are their career goals? What are their life goals? What are they going through in life right now that made it to where they couldn't get their essay in on time, right? Those sorts of things. And that's when I got to transition from being a professor to an actual counselor, and in some cases coach. And I've always tried to capture and keep a little bit of that in the accounting work that I do. And I've gotten to a point now to where I feel just confident enough to not only do that with clients, but also do that with other tax professionals who are trying to get their start in this profession as well. So yeah, absolutely. Definitely education is still a key part of the work that I'm trying to do. It's mostly client work, but trying to factor in a little bit more of that kind of work too.
Awesome. Well, it keeps you sharp. And Chris, good call having Jeremy on with us to talk about this topic. And yeah, man, we'll have you back. So we'll ping you at some point and harass you until you come back on the show with us. So
appreciate it. I'll be looking forward to it.
Show notes, links in there. Click on them, follow them, and we'll see you back here again next week on the Teaching Tax Law podcast. Have a great week, everybody.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.